Hello, welcome to European Open Briefing for Wednesday, November the 7th. I'm Rafa Bayajan, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. So all the attention is on the US midterm elections. The Democratic Party took control of the House of Representatives as had been expected, but the Republicans are projected to keep control of the Senate. So this was more or less in line with what had been priced into the markets. Despite that, we're seeing a much weaker US dollar this morning. Dollar index down by around 0.5%. It's fallen below the 96 level. Equities are somewhat mixed. In Asia, they were mixed. In Europe, we are seeing gains of more than 1%. US futures are also pointing to slight gains when trading resumes in the North American session. If you look at dollar yen, it's not doing too badly. It's managing to hold above the 113 level. It did briefly dip below it, and just before the US session yesterday, we did see dollar yen touching a fresh high. If you have a look at what's happening to European currencies, the euro and pound both benefiting from that weaker greenbacks. Euro up by around 0.5% to at 1.1482. We also did see some positive Eurozone data over the past couple of days that's supporting the euro. Sterling is also extending its gains this morning. It's trading around 1.3155 against the US dollar on rising hopes that we could see a Brexit deal before the end of the month. But the biggest performer this morning is the New Zealand dollar. We saw a very strong employment numbers out of New Zealand, so that lifted the kiwi. It's up by around 0.6% at the moment at 0.6776, despite the fact that yesterday we saw another dip in dairy prices at the latest bi-weekly auction. Aussie also benefiting from the weaker dollar. It's also up by around 0.5%. Having a look at commodities, gold is up to at $1,233 an ounce, although still struggling from those waivers provided to some countries, meaning that supply shortages from the Iran sanctions aren't as bad as had been feared. We're seeing WTI dip to a fresh 7 months low. And having a look at the main gainers this morning, kiwi, euro, both the biggest gainers. Gold is also not doing too badly, and then we've got the pound. Having a look now to the dollar index, we can see it's retreating over the past few days. It has fallen to a 2-week low of 95.88. So the midterm election results were pretty much in line with what had been expected and was mostly priced into the markets. So this does make it more likely that now that we've got a split Congress, further fiscal stimulus is looking less likely now, particularly more big tax cuts, which Trump wanted on middle-income earners. However, there could still, the Republicans and Democrats could still manage to find an agreement to increase spending on infrastructure projects, which would be positive for the economy. So overall, it's not being seen as too negative in terms of the Republicans losing control of the House. But a bigger potential risk is the Democrats are now more likely to press ahead for tougher scrutiny of Trump, such as forcing him to release his tax returns. So that's something potentially to keep an eye on. Looking now at European currencies, euro and pound both doing rather nicely this morning. Euro hitting a 2-week high, pound at a 3-week high. So yesterday we saw a big upward revision to Eurozone final composite PMI for October. Now we're seeing German industrial output beating expectations, and the prior figure was revised up. So perhaps that could be the start of more positive data coming out of the Eurozone. One potential risk is disagreement between the coalition partners in Italy, which there's some risk now of a vote of no confidence, but that risk is fairly remote for the time being. Looking at what's happening to the Brexit negotiations, yesterday there was some headlines saying that the DUP parliamentarian said that the UK is heading for a no-deal Brexit. We saw the pound dipping after those reports, but then once the Prime Minister Theresa May's cabinet meeting ended, we saw the Brexit Secretary doing giving a thumbs up as he left. So this was taken as a positive meeting by senior UK politicians, and now there are reports that that there's a strong possibility of a deal being reached before the end of November. So all of that is pushing the pound higher. And a quick look at the kiwi, we can see it's surged to 3 months high of 0.6778. We saw unemployment rate in New Zealand dropping to 3.9%. Expectations were for 4.5%. So that's quite a big deviation there. Jobs growth was very strong at 1.1% over the quarter versus forecasts of just 0.5%. Wage growth remains somewhat subdued, but overall this means that the next move by the Reserve Bank of New Zealand will definitely be up, and rate cut is now seen as pretty unlikely. We do also have the Reserve Bank of New Zealand policy decision later today. That will be at 20 hours GMT. In terms of data, though, it's looking fairly quiet. That's it from me. Thank you very much for watching, and have a great day.